Hi everyone, I'm joined today by my colleague Sean MacHale, and today we'll be highlighting key ESG themes for financial services for the second half of 2024. Sean, so far in 2024 we have seen incredible growth in the ESG agenda for financial services. Looking at regulatory priorities, preparation for disclosures under the EU Corporate Sustainability Reporting Directive, CSRD, is well underway through double materiality assessments. What's next for our clients in terms of CSRD?
Thanks, Syreel. So I think what's next in terms of CSRD is the so what. So now that you've done your double materiality assessment, is what does that mean in terms of metrics and targets, and how indeed do I set those targets? I think clients now are also looking at the operational control and the governance process around the exercise, whilst of course making sure that they can achieve limited assurance, which is essential. And then I think finally a lot of consideration is going into how do we report whilst we still build, because obviously it's an iterative process. So what does a year one solution look like vis-a-vis a year three solution, and what does steady state also mean?
Since we've seen this shift in the execution of sustainability objectives, we've also seen many firms go public with their announcements to deploy sustainable finance. We also have the Net Zero Industry Act as well that will further drive the sustainable finance efforts. To support these commitments, what should our clients be considering?
So it's really important that clients really consider, how do I scale? So do I have the operational framework in place that I can move capital where it needs to go to, in time? It's really important that when we move capital, particularly in the context of the 9 trillion opportunity, is that we're measuring the real world impacts that it's having, because again, it's super important that where we deploy capital, it's having the required effect. So we're seeing financial services look at their products, look at their services, and bring back and apply that question of, can I scale it? What does the operational framework look like? And what supports do I need to put in place to move capital at scale in an accelerated fashion?
Speaking of measuring real-world impact, the Transition Plan Task Force has released guidance on climate transition plan disclosures, and the NGFS has action points to spur the development of integrated transition plans. What's the role of transition plans in decarbonisation?
So the transition plan is essential in delivering decarbonisation, and it's really welcome, the guidance that's just been recently published. But I think when financial services in particular looks at this, what they really need to think through is having a dynamic transition plan. We live in the real world, and there'll be ups and downs. It won't be straight line in terms of getting to that net zero economy. They also need to factor in externalities. So how quickly will the grid green? And then finally, they need to build in levers, because certain sectors may move faster than others. And of course, this has to be done against a background of maintaining and increasing return on equity.
Now, moving on from the E of ESG to the S of ESG, which has been gaining momentum as well. What should our clients be considering in terms of the social agenda?
So social needs to be looked at in a much broader sense. Societal norms are changing all the time. We have a lot of migration happening. Equally, the family unit, as we know it, has changed dramatically in the last 10 years. So banks, insurers and asset managers need to look at this and need to make sure that their products and services speak to new societal norms and changes in society. And of course, at the same time, start to look at socially conscious AI, and of course, new regulation that's coming down the tracks, such as the Corporate Sustainability Due Diligence Directive.
Another topic that has gained momentum is the increased accountability on nature and biodiversity, especially through regulation as well. So why is nature so important for financial services?
Nature is essential to financial services because the real economy is heavily dependent on nature. Everything from the obvious things like food production and agriculture, all the way through to pharma, big tech, and of course construction have very large dependencies on nature and biodiversity. Therefore, it's essential that banks, insurers and asset managers understand the risks in terms of their portfolios, but also then understand where opportunities may reside for them to fund and to finance going forward. It's absolutely essential that financial services incorporates, understands and analyses, and of course moves capital in an appropriate manner to support biodiversity and nature.
Thank you so much for sharing your insights, Sean.
Thanks, Syreel.